To start with, we'll focus some time in terms of understanding a single named CDS, one of the most important credit derivative which we come across. Then we talk about the portfolio credit default swaps, which is an extension or which is a combination of various individual default swaps. Then we also look out for CDS based indexes or indices, CDS based indices, what goes into each of them, and some kind of variations of credit default swaps like asset default swaps, equity default swaps, which are more or less on the same lines as credit default swaps, which some kind of differences existing between them. So these are the major areas that we are going to look out in this session. So getting started on the same lines, initially I will look out for single index or probably a single named credit default swaps. Now, whenever we are talking about a single named, we are talking about one single reference entity. So a default on one single reference entity where the reference entity needs to be clearly specified. The default on this particular bond, the default on this particular loan payment. So it has to be very clearly identified, and that is the name associated with single reference entity. But otherwise, whenever we are talking about a credit default swap, it is an agreement between a CDS buyer. CDS buyer on the other side is also a protection buyer, and a CDS seller, right? He is the person who is a protection seller. So it's a bilateral agreement between these two parties, wherein this party keeps paying premiums either one time, right, lump sum, or on a regular yearly kind of a basis. And this party will compensate in case, so the compensation will be on whole in case a default event occurs on some particular reference entity. So let's say the reference entity is some bond on which the principal and the interest payments are happening. Now, so it's actually as simple as an insurance contract. This party keeps paying the premiums to this party at regular intervals of time, and when a loss event occurs, this party will compensate this party for the amount of loss, right? In that way, it resembles more closer to that of an insurance contract, especially a single named CDS is more similar to that of an insurance contract